Hello and welcome. My name is Thomas and this is For the Common. Thank you so much for checking out this video and for the support of the channel. It means so much to me. If you're new to For the Common, this channel is all about arming everyday investors with the tools and information they need to be successful. And the secret behind For the Common is not actually that complicated. It's all about finding amazing companies that you can own for years, if not decades, and participate in the long-term compounding potential and value creation of these amazing businesses. And that's really the focus of the channel. And as well, this video is going to dive more into that in identifying really great businesses and giving you the markers to look for. So I think it'll be really interesting. But before you check this out, I would highly recommend over my shoulder here is the first video in this series, which talks about some really important takeaways that I think will set up this video well. So they're direct ties, and I really think you should check out the first video before you watch this one. So I want to start this video where I ended the last one, which is with a Thomas takeaway. And that takeaway is that over the long term, the price of a stock will ultimately align with the fundamentals of the underlying business. And what that means is that in the short term, the stock market can do some really crazy things, and that's our friend, Mr. Market. But over the long term, a stock price will eventually follow the strength of the underlying business. And we've seen so much of this right now in today's market where some really good businesses and stocks are down 40, 50, 60, 70%. And that's only over 3 months. So if you look over that period, have these businesses become 30, 40, 60% less good? No, they're still really awesome businesses. But again, the market will do some crazy things in the short term. So the key is to focus on those long-term prospects of the company, and that will ultimately lead you to some really great long-term stock performance. I want to talk about another really important point here, and we're going to name this Thomas takeaway number 4, and it's that it's okay to disagree. It's actually good to, because that's what makes a market. And to explain, everything that I talk about today with respect to a company is my opinion, and I could be wrong. I could be totally off base, or you just might have a different point of view than I do, and that's okay. That's actually great, because when you think about the stock market, it's just this exchange where a buyer and a seller meet and they trade on the exact same information. And that perspective that you have, your opinion as an investor, can actually be one of your most powerful tools and can give you an edge. And your opinion is what might actually create some really awesome opportunity for you to invest in a great company over the long term. So how do you know what to look for when you're trying to identify a really great business? Well, you probably already have a decent idea. As I mentioned in some of my other videos, my old job was to interview portfolio managers all day about their investment strategy. So they'd come in with their decks and we'd sit down. They'd talk about how they're trying to identify really good businesses that are high quality. And almost all of them would say that. So what made them different? Well, interestingly, these portfolio managers all look at the same information about a company, and then they come up with their own perspective. And sometimes those perspectives were similar, but the perspective of the portfolio manager is actually what led them to make their investment decision and take investment action. And the viewpoints that they came up with weren't necessarily rocket science. So let's take an example like Disney. It's the house of the mouse. You may love it, you may hate it. I haven't found that many people that don't like Disney, but you might think of some really expensive theme parks or some really expensive hotels. Yes, but you might also think about some really awesome brands that they have in creating great content. So maybe Star Wars, maybe Marvel, maybe Pixar. Yeah, have you also heard of ABC, ESPN, Hulu? That's all Disney. It's pretty impressive. So I think it's fair to say that's probably a high quality company. But let's break it down a little bit more. Most notably, Disney has those incredible brands that we've already talked about. But importantly, those brands can connect and inspire people across the globe. It's super powerful and a really great start. As well, Disney has a history of creating those franchises out of nothing. Think about Frozen and all the success that's had. And then on top of that, you've got Pixar, Star Wars, Marvel, all now Disney. It's super impressive. Additionally, Disney has this history of being able to take that content and turn it into an experience. So you've got theme parks, cruise lines, those hotels, also things that you can buy at the Disney store. And Disney makes a lot of money on those things, and it actually creates this really amazing growth engine for Disney where they create the content and then can sell an experience. And that's super unique to Disney and extremely powerful. And if you're an investor already, you might be thinking that, hey, there's a lot going on in the TV, movie, and media landscape. Can Disney really keep up? Well, personally, I believe that they can because Disney has been making some really significant investments in what's called direct-to-consumer or DTC distribution channels. And might sound complicated, but you're going to know it as Disney Plus, Hulu, ESPN Plus. That's their new strategy, and that's how they're going to compete in this new world of streaming content. So when you look at the amazing brands of the company and the investments that they're making for the future, it's hard not to believe that Disney is going to do well down the road. How do you boil that down to make it applicable to any company that's out there, say in industrials or financials or even the communications sector where Disney resides? I like to look for a few key characteristics, and I'm going to highlight those now. The first one is to try and find a company that's got a really compelling future, and that means a company that can perform extremely well in the new economy or the economy of tomorrow, because there's always disruption and things are always changing. So wanting to find a company that can get bigger in the future, and that usually aligns with increasing sales or revenue growth. So how can a company do that over the long term? Well, there are a couple ways. I think a few examples are they maybe take advantage of a technology that they have, and that can drive future growth. Or they have really unique assets that are in demand by customers, and maybe these assets create a ton of value. So that could drive long-term growth. Or another one could be there could be a large mega trend for a sector, so it supports all the businesses out there if they're taking advantage of it the proper way. In the Disney example, I think they have a really bright future ahead, and it's a combination of some of those factors. Disney's investing a ton of money in their assets, that content creation engine, and they've proven to me over time that they can create content that people love. That's going to drive long-term growth. Additionally, Disney's investing a ton in the streaming services that we talked about, which, in my opinion, is the new landscape of media. So that's a mega trend that Disney's positioning themselves to be a winner in long term. What are maybe some other examples of companies that are doing well with this bright future view? And another could be Amazon. And you might be thinking, man, e-commerce is pretty penetrated. There are a lot of people who are Prime members. How can they continue to grow? Well, for me, I think there's still going to be a lot of e-commerce growth down the road, and it's always possible that they sign up more Prime members. Additionally, they're coming out with, Prime Video and other ways to make Prime more and more attractive. So I think it could drive adoption. And then interestingly, something that people don't talk about within Amazon that's super important to their long-term growth is their Amazon Web Services business. And if you don't know that, it's a cloud business where Amazon, if you think back in the day, used to have a lot of servers and computers to handle traffic on Black Friday, let's say, a very popular shopping holiday. But then all those other days, what would they do with that server capacity that they had when, the traffic was a lot lower? They came up with this ingenious plan and really lucked into an incredible business to sell that extra capacity when they don't need it. And that actually created the public cloud business that we know today. And that is growing incredibly quickly. So the AWS or Amazon Web Services business within Amazon grew over 40% versus the first quarter last year. So not bad. That's very fast growth. And for me, shows that that's still very much in the early innings. Another example, how about Tesla? For me personally, I believe that battery-powered EVs are going to be the future of transportation. I mean, they're cheaper to maintain, there's less maintenance. The gas doesn't, don't worry about gas prices. And the instant torque and power is pretty incredible. It's really, really amazing technology. And for me, I think that is in its really early days as well. Additionally, Tesla could roll out new models that could drive growth. And if you look at what the Model 3, Model Y wait times are on Tesla's website, I think it's pretty clear indication that adoption still is pretty early for EVs, and rising gas prices also helps. And then you think new models that they could build, they could also come out with their solar panels or all these different software technologies. I think there's a long runway for Tesla to have good growth. So for me, I think they also have a very bright future. And then what's an area that doesn't? Well, one might be, on the contrary, energy. And again, me personally here, in my opinion, but for me, I see the long-term view for energy as being a negative one, where with alternative energy sources and EVs, I think that's going to eventually put pressure on energy prices and cause fossil fuels to be less relevant. And that could take 10 years, but for me, that's a long enough investment time horizon that it's generally an area that I try and avoid because I don't think that future is very bright. Another characteristic I like to look for when trying to analyze a business is that I want a company that can stay in front of the competition. And what I mean by that is beat the competition. Because if we're talking about these really great long-term revenue kind of growth tailwinds that companies might have, we want to ensure that our company can capture that revenue growth, can profit from it, and can also keep the lead, and not only over a few years, but hopefully over decades. So how might a company do that? Well, there's a lot of ways, but some examples might be they have some really unique assets that just beat competitors. Or they might have a brand that just wins. Another could be the market structure is such that only a few competitors exist and we pick the best one. Another way could be our company is just the most efficient in its industry, and that can create a significant advantage. So let's take our Disney example and try and walk through whether or not they can stay in front of competition. For me personally, I believe they absolutely can, and that's been driven by their investment in their brands. So Pixar, Marvel, Star Wars, think about all the amazing Disney franchises. For me, they've proven over the years that Disney can invest in great content and then drive revenue over the long term by connecting with their customers in a way that very few companies can. So for me, I feel that Disney's investments in their content will allow them to continue to make those connections down the road and give them a really deep competitive advantage. And as well, they're investing a lot in their streaming service, which if the content on there is very good and has that connection with consumers, then all likelihood is that they're going to be a winner long term as a streaming service that people choose to use. And then what are some other examples? Let's take Google. Awesome business. We're obviously on YouTube, so I have to talk positively about them, but I really do love that company. They have some really great businesses, and one example is Google Search, a really powerful tool that, there are some competitors out there, but I've never found a good one. And they still have the search market cornered for the internet, and they make a ton of ad revenue as a result. And then if you look at YouTube, right, like we said, a really great search engine, again, where they drive a lot of ad revenue. Additionally, you have Gmail, you've got Google Maps, you have Android. These are essential services, and in my opinion, I think Google's going to continue to stay in front of the competition with those services. So I'm a big fan of Google. And then another one could be Boeing. So if you love Boeing, hate Boeing, totally get it. But for me, I feel that Boeing has a really interesting advantage in their market because there actually aren't that many competitors. And if you think about the commercial airline space, these planes are very complicated, they're very difficult to manufacture, and they're very difficult to get the proper approvals. So as a result, there's only 2 manufacturers. So you pretty much have a 50-50 chance in the market to pick the winner. And for me, I really believe in Boeing. And Boeing has absolutely had their challenges, don't get me wrong. In the 737 MAX crashes, it's tragic. But I think the company is getting better. And for me, with the market dynamics of only two players, I think Google can stay ahead of competition. And then a company that I don't really have much conviction in would be a company like Roku. And I could totally be wrong on this, and a lot of people love Roku, but in my opinion, Roku has built a business around their devices, and there's a lot of different ways that you can stream out there today. And so for me, I don't think that's a very deep competitive advantage. And as well, Roku now is having to transition their business to invest in content. So now they're up against the likes of Disney, Netflix, Amazon, all those, Apple, all those companies that are investing in great streaming services. Now Roku is having to also join that fight, and it's going to be very, very difficult. We mentioned some really significant competitors, and I don't think Roku has a great shot. So for me personally, I don't believe and I don't have a ton of faith that Roku is going to be able to stay ahead of competition. The third characteristic that I like to look for when evaluating a company is that I want to find a business that's led by very focused chiefs. So I know that sounds weird, focused chiefs, but let me provide a few examples. How about the chief executive officer, a CEO? How about a chief financial officer, CFO, chief operating officer, chief technology officer? There are a lot of chiefs at companies, and they really matter. And the reason why is that we live in this super dynamic economy where things can change so fast and disruption can come out of nowhere. So you have to have a leadership team in place that you can really trust. Unfortunately, it's tough to quantify, but what I usually look for are management teams that have good long-term track records, but also importantly, they own a lot of stock. And you want that because if they're big stockholders, then you know that their incentives are aligned with you as a stockholder. So that's a really key takeaway. And a few focused chiefs that I really admire include Mark Benioff at Salesforce. Mark was a real visionary. He previously worked at Oracle and had the idea that software businesses could be managed in a different way. And he invented this model called software as a service. And it wasn't certain if it would work. And it's clearly proven out that it has with the company that he created named Salesforce. And this software business is focused on customer relationship management software, or CRM, and it uses this software as a service business model and just become an absolute behemoth and super influential company. And so for me, Mark at the helm is a really great person to lead the business because he's the visionary and he's essentially invented this operating model. So I'm very impressed with Mark, and as well, he has some really cool philanthropic endeavors that I admire. And then another really excellent chief is Jensen Huang at NVIDIA. He and his co-founders essentially invented GPUs, and these chips, these computer chips, are ones that are the backbone of some of the most exciting and innovative technology today. So that could be in data centers and cloud computing, that could be artificial intelligence, that could be autonomous driving, machine learning, all the buzzwords that you've likely heard. A lot of that technology is enabled by NVIDIA chips, and being that Jensen and his team invented the space, they're likely going to be a really great leadership team because over the years they've been able to beat competition and they've been able to capture some really significant revenue tailwinds, and you've seen it with fantastic long-term stock performance. So for me, I think Jensen is a very excellent pick to be the chief of the organization. So in conclusion, how do investors then go out and try and find those really compelling companies that as a result lead to some really compelling stocks that deliver great long-term returns? Well, There are a lot of different ways to invest, and this is just one of them. My years of experience have shown me that you want to find a quality company that's going to win in the new economy. And you also want a company that's going to make a lot of money for shareholders along the way. And I believe there are a few characteristics that you can look for that will really help you identify those quality businesses. And first, it's finding a company that has that very compelling future. And second, you want a company that can stay ahead of competition. And third, you want a company that is led by some very focused and capable chiefs. If you got any value out of the video, I would really appreciate a like or subscribe. That support means so much to me. And I'm excited about the next video. We're going to tackle a very challenging topic in finance and investing around valuation. It can be one of the most difficult, the most fickle topics. And it's really key to determining if today's stock price makes the stock a good buy, which is really important. So I hope to see you then.